Afternoon, Scott Redler, T3Live. Welcome to today's recap. So a day of drifting. That's what typically happens after two big up days. You have a day where the market does a little probing. Where does support come in? How strong was the actual two-day move? And on light volume, that's what takes place. So you have to figure out, what are you doing on a day like today? Are you involved in your positions in a macro level, or are you looking for quick little cash flow trades in the first hour and a half for to make your day, or are you trying to perhaps reposition into some things that you got stopped out of last Wednesday? So all in all, there was a bit of something for everyone, but it was an easy day to push the keys, get happy fingers, and definitely lose your cool a little bit, and hopefully that didn't happen to you. If you look right here at the spiders, let's take a look at the SPX. You'll see that we're still just wedging here, right? We're just wedging, we're just following this uptrend. That's why I really didn't want to get too deep into things today, because we still could come down and test this area. The low from this day was 1240, so typically, we've been going a little bit below it before coming back up. We do have this whole uptrend intact. You have a bit of a downtrend intact. So sometimes you see a very, very tight range come into play before you get range resolution, before you either break to the downside or break to the upside. And now everyone's kind of jockeying, and you have to figure out if you're placing big bets or if you want to be quick and nimble and jump on the horse when it runs its race. And I'm not saying it can't be to the downside. It does feel a bit like it will be to the upside. So we'll keep that in mind. And what we have to continue to watch are these banks. These banks are really not acting well. Obviously, you still have headlines that could happen at any time in Europe. So that could help dictate on which way we go. But for now, the market does a really good job absorbing these headlines, unless they're nutty that we haven't heard yet, and there are a lot that still can come out. So just be quick on your feet. That's it. Unless you're, again, billion-dollar fund or $100 million fund, you have to be in at all times. Just don't. Be in small, be in some things you like, know your time frame, and figure it out. Like, I'll show you a chart of Amazon, for instance. Amazon, if you look at it on the daily chart, doesn't really look like much, does it? Okay, it broke above this area for a nice little trade. It's been just consolidating, moving sideways. It had a push through, didn't close on the highs. But if you look at it on a 5-minute time frame or a 3-minute time frame, it's made my day, and we had a lot of fun with Amazon today, right? Amazon was it was a great trade, right? Futures came in, Amazon stopped coming in and showed relative strength. We knew what the previous area was that could potentially get into the gap from earnings, knowing that people are short. And right there, this was your tier 1, and then here you get involved with a nice tier 2, or if you happen to miss this, look at this little bull flag, never pulled in, holding above previous resistance, and then you had a nice push to 222. And that was the trade. I was done with this trade around 221. My whole target was for a nice little power punch trade from 218 to 222. And that took place, and the rest of this was just a noisy, noisy day. So, did you play the power pack punch to the upside, or did you play the noisy part of the day that wound up just doing a whole bunch of nothing into the end of the day? Could have given back your whole day trading the noise. But the reason why we had it there was because, look, you had 219.25, you had 220.20, so you knew if it would get above this, you had room to the moving average and room to somewhat fill this gap. So you had your playground to play on. The question of where you wanted to take it off, and I leave a little early. Sometimes it upsets me and I cry about it, but typically that's what keeps me hitting singles at a high batting average, because I'm not looking for always a double and a triple. Google on the radar, strong stock. If you look at the recent high, right? The recent high was like 613. You look at Friday's high. We all know that if stocks get through that, anyone playing it short from the previous day or week, they have to get squeezed. And anyone thinking we're going to new highs within the next week or so gets a little antsy. And you had a good trade there. You look at Google on the daily, and you'll see that this was one area, right? This 612.09 was a pivot point, and then you had this previous high that there were some shorts that were short, saying I'll be short versus 614. And then obviously there are some longs that say we're taking out this high here of 627. So if we get through here, we're a buyer. Doesn't look like much right here, but if you look again on a 3-minute chart, which a lot of us trade, this was a lot of fun today too, right? It opened up sort of down, it pivoted in front of this high, right? This was the previous high. So You had a quick move to the upside, a little bit of a flag. This is when I got involved. I bought it as it was going above here, never traded back below it. And then that next area was what? That 614 or so. And then once it went through it, you got to move to 617. So a nice move from 608 to 617. Definitely worth a trade. Looked decent. And when I took most of it off in here, I tried to hold 100 or so, or a little bit of a position. I'm not exactly sure what it was. And then once it broke 614, I said, I'm done. Don't want the trade for now. On a micro version, this doesn't look so hotsy-totsy, right? On a macro version, it looks fine. It all depends on your time frame. And then went sideways, broke below it, and then really did a whole lot of nothing, just like the rest of the market into the close. So know your time frame. As far as gold, I was looking at that. I did buy a little bit. If you look at this overall wedge right here, right, this was that low, held the moving average. Look how it held higher, nice and tight right here. So it's worth being in a trade at tier 1. And then if we get the trade actually above 175, it could continue. This obviously was a nice pivot. Some of you that are still in here from this area, congratulations for those looking for a trade. Nice feeler here, just in case they gap it up. And then if we get above 175, it could continue. Let's take a look at silver. Silver is nice and tight also. Silver, you have this little channel type formation right here. Little small uptrend. You could even make it a micro version. And above 34, you could be cheating a little bit, buying a little silver, and then if it clears this 34.40, you have a nice trade to perhaps this moving average here if these metals stay strong, and they look like pretty decent considering this was the lower end of the range, holding higher, range constricting. Typically that's a precursor to a move. And then guys made some money shorting Apple today. I tried actually for a cute little long, got out, then I made it up with a nice short below 380, and then I said I'm staying away. To me, the meat and potatoes of the move was shorting 398, adding through 395, going out short on Friday, let it open up, shorted again, traded through Thursday's low, and then that was a nice 25-point travel range. And now it's getting a little tough, to be short this, considering where it came from. But I would say it's just as hard as it is to be short, it is to be long. I said if we don't get back above this 388, we're going to break this 380, and now it's below it. And I'll put in the 200-day here. Let me take this out. I drew this. The 200-day is like 362-ish. So you have to know what that is. But I think you also have to know where the 150-day moving average is. So this is the 200-day that everyone's going to be talking about, that everyone's going to say that it has to hold. So, for some, they might want to wait to cover into it. So, or for some, they might wait, I'm not going to be a buyer to the 200-day. So it's at least worth noting where the 150-day moving average is, because some people might try and be cute. And I'm not saying it's going to hold there. But if you're still short, I would say don't be a piggy and take some off. But this 150-day comes in right around this last uptrend that I drew that could just make some people feel as if they missed it because they were trying to be perfect into the 200-day. So just have both of these levels on hand. And then obviously it's got to get through today's low tomorrow to be in motion. But at this point, here was the trade that I thought would have been the easy part of the move or the quick part of the move, and now it's a question of what happens next. But overall, the chart doesn't look good. It hasn't been acting well at all. The people making fun of me on Friday, I said the juice is loose, but it's almost like that pickle jar where it's really, really tight, and once one pickle goes out, then a few start coming out, but then there's room for everybody. So if people start getting scared with Apple, and if the news isn't good, or I don't even know, it could be an avalanche. So hopefully you're either out, you're hedged, or you're short, and then we'll have opportunity moving forward. Tim Cook, split your stock. You'll have a better acting scenario because up here it's just over-owned. Too psychologically high. It's not high at all. Valuation is cheap, but at 379, it appears as if it's not valued as a cheap stock. So do yourself a favor, save yourself some stress as you just took over this company. Split your stock 3 for 1. Anyway, Baidu, not really much going on here. Just it's looking a tiny bit better. Still holding in this wedge. Some people got long today. If it starts getting above 140, it could continue. Let's see, the RTHs still hanging around. A lot of retail data coming out tomorrow, so hopefully you're just not too deep in them. OAHs look like the spiders, just hanging in there. inside day, absorbing still this big move from the lows. I got involved with Walter. Some guys caught it early. I actually got in a little later. There was some, I guess, some takeover talk, but who knows? All I know is that it's holding this area. If you look today, there was some volume attached to this. Probably one of the only places in the market that had actually volume. So if you take a look here, some volume. Hopefully, I don't think it's going to be taken over, but so if it's not, if it's down a little bit, it should be buyable. Never buy a stock for takeover, but when you see some volume and you see it come in, who knows? Maybe something's cooking. IBM did not hold the open, so I did sell some, and I was using 188 as my don't pass line. Perhaps it was just too focused on today. We'll see what happens if it pulls in and holds around this 185, or if it just goes sideways before making new highs. And that's really it. Today was a day of micro trades. Today was a day to figure out your commitment level. Today was a day not to push the keys too far because there wasn't much going on. We had a 350-point move in the Dow Thursday, Friday, and we pulled back 75 today. Makes sense, rightly so. So we'll see what happens in the next day or so. I do think this lower end of the wedge is what is going to be put in, and then we could get the apex, and then we have to figure out which way it's going to resolve. To me right now, I put more probability to the upside versus the downside, but we have a lot of headlines that are still coming in out of Europe. We still have to deal with the super committee from Washington, and just there's still a lot to absorb. So don't fall asleep behind the wheel. Don't be lulled to sleep because of the action. And I think everyone's doing well, and people are on the highs of the year, highs on their month. That's you. Congratulations. Now just try and add some cash flow and don't put yourself in harm's way. Scott Redler, T3 Live, the recap, see you tomorrow morning call. Have a good night.